Hey everybody, it's Pete. Welcome to today's episode of Today's Best Stock Picks. It's Tuesday, July 7th, 2020. Thank you so much for joining me today. And thank you if you subscribe to the channel, if you find these videos helpful, and especially if you're making some money off the picks. It would really mean the world to me if you click down and subscribe, and also share it with your friends. If you find that we're giving you some good picks, we're giving you some good education, let's spread the word. I actually have a big passion for doing this and really hope that I'm helping you put some money in your pocket in this very weird, bizarre world that we're living in right now, which takes us to today's stock pick of the day. It's NVAX, NVAX. If you're not aware of it, it is actually up 32% this morning. It's trading near $110. I'm going to give you the what's the word I'm looking for? They have like a code word for it. It is. First of all, they've received $1.6 billion in funding. This is a story I found on Market Watch this morning. But this is the interesting part here. Operation Warp Speed, phase 3 trials, which are obviously the latter stages of it becoming something real. So now what do you do with it? If you are in the stock or if you're not in the stock, what do you do with it now? At this point, is it too late to get involved, which has been a massive question that we'd be getting around some of these smaller price stocks that have done similar moves. Do you book profits after the stock has now basically gone from $16 to now almost 112 in just about 9 weeks? What do you do? Well, that really depends on what type of trader you are. Are you a position trader? Are you an active trader? Are you somebody who's investing in the stock? If you're an investor, you're obviously holding on to it because you love it at this point, clearly, right? But if you're a position traders are usually trading. They're not looking for so much of a swing trade where it's looking to get in today and maybe get out within the next week or two. A position trader is usually looking for a bigger move over a couple of months. And that seems to be what we have here. We're basically talking about from May to now, July 7th. What do you do? And again, if you watch the video I did this morning in Stocks for Breakfast about setting up and finding easier trades, a part of the video was essentially, at what point do you decide if the stock has exploded and I buy now, what are the odds of me making money? If you're initiating a new trade right now, you need to have very certain criteria that tells you I can manage my risk. That's really the big thing at this point. There's not a question of whether or not there's opportunity here. It's a question of, can you manage your risk? And we actually had a question in our private coaching call last night about, what do I do for a trade if I'm not in front of my screen all day, and whether or not if I get stopped out of a position, but then the thing does exactly what I wanted it to do, what am I supposed to do if I'm not sitting in front of a screen? Well, unfortunately, if you're not in front of your screen all day and you can't program in, if I get out, then do this and place another trade, you have to be an active trader at this point where you have to be able to make a decision. It's very difficult to justify putting on a new trade right now unless you're willing to put in your stop loss and say, this stock that's now up 33.5%, what is the right risk? At this point, you almost have to pick a dollar amount that you're okay with risking with the right share size and say, look, if I buy the stock at 112, where's your stop loss? It's off the charts. We're at levels that we've never seen before in the stock, quite honestly. And then you have to say to you, well, I can't say that. We haven't seen these levels since 2016, but 150 is the next level. So I'm actually going to go to the charts in a second, but my point here is this. These stocks that are exploding, and especially NVAX today, you need to have a line in the sand that says, if I'm willing to accept this risk in exchange for the potential profit, which again, looks like the next level is 150, this is not a normal trade. This is not you're buying a pullback in a stock and looking for it to retest the highs. This is a volatile story, a good story if you're an active trader. And quite frankly, if you can't be in front of your screen after stock is up this much in just a few weeks, it might not be the right trade for you right now. But if it is, if you are an active trader, the number one sign we're looking for today, there's two trades. There's the line in the sand that we use to use as tape readers, the number one line in the sand. Which, by the way, if you want to trade live with me and watch this stuff during the day, click down and find out how to do that. I'd love to see you in the community, is the open price. If the stock opens here and it's this volatile and the stop loss, the potential stop loss is miles away, the stock closed yesterday at 79. Right now it's at 113 plus. there is no stop loss on the chart for the most recent price action, so you need to manage it. So with this stock opening significantly higher, I'm looking for it to remain above that open price. So I have a line in the sand that says today's buying pressure is in sync with the longer term buying pressure. Now, the odds of getting profit taking on this opening are pretty good. So if we get profit taking, we're going to have what's called a false positive open, where we're up here and we start to pull back. Then you have two different entry pieces. If the stock pulls back and you find an entry, then you need to be looking for a spot to manage risk. So let's say you find that. This is where you work the trade in two pieces, at least two pieces, because it's not above the open. So there's profit. There's today's open and profit taking. The first piece would be that first entry we can manage risk. And the second piece is if the stock closes its way back and turns positive from today's open. So two very distinct trades and two very distinct types of traders who could take advantage of this. If you're not at your screen and you're not managing it and you have to buy the stock and put it on and let your stop loss manage it, you really have to think, is it the smartest move in the world to be buying a stock at this point, or wait for a pullback, which is something similar to what we're going to talk about now in a different stock. So essentially, this is NVAX here. We're taking a look at where it's traveled to, and you can clearly see that basically from $16 up to where it is now, around $113.50. And you can see right around 150 is the next level. So again, everything I just said is what needs to be taken into consideration. Now we have INO, which you can see is up about 4% here, but this is actually giving us what I'm talking about has potential in NVAX right now. NVAX is probably a little bit stronger play because it actually does have government funding. But if it's not the right opportunity for you right now, based on the criteria that we just outlined, this is something to consider today because the stock exploded, does not have a lot of institutional commitment for a longer period of time. It's only a few days, but now it's given us a spot to manage risk. Almost 2 inside days, which we really love, where it consolidates and then we're looking for an expansion in volatility. This is something to consider today as well. We're seeing something very similar in Boeing, where we basically have a 4-day consolidation. Boeing's a little bit different. We don't have any kind of clear buying where we're just waiting for the pullback, which obviously INO is a pretty extreme pullback. But this is one where we're expecting a trend day in Boeing, but we're not calling the direction, although the market is down quite a bit now pre-market. So a couple of different trades. One of my favorite trades that I'm looking at today is MTCH, Match.com. When a stock breaks through and punches through to all-time highs, it's always good to consider buying the all-time highs. Now, we had a question yesterday, again, in the coaching program, in our private meeting last night. Why does it always feel like I'm buying the 52-week highs too late? Well, it's because you have to anticipate before. There were a couple of entries here before it got up there where you would have been in a position to be profitable and then make a decision if you wanted to hold that trade. Now, the stock has pulled back for a few days. This is one of my favorite setups where I'm actually looking for the stock to open lower, push lower, and then find a spot to buy, looking for it to retest 107.50. BILI looks similar, but it's not the same trade because this is one giant candle versus 3 days, two and a half days of selling, where now it's reaching a point where I like it a little better at that price. So although they look like they're the same thing, they're not, because it's 1 day versus 3 days. Some other stocks that we're absolutely taking a look at, just in case the market follows through on the short side today, I do like OKE. It's got a little bit of support here at 26.50, but then the next level is down to 18 if you do like to short sell. Amazon, we're going to go through the list of stocks that we really want to take a look at today. Amazon flying to new highs again. Apple as well, all-time highs. Tesla, gosh, this stock is just destroying anybody who's short selling this stock right now. Netflix is actually an interesting one too. Not quite an inside candlestick here, but a really solid momentum move from 430 to 500. I'm actually looking for it to consolidate. Maybe we get a little better picture here. I'm looking for it to consolidate up at this level and then actually look for a new punch to the upside. So not looking to buy Netflix as a swing trade, 100% looking to day trade it as long as it meets that intraday criteria that I gave you before. Nice call out in TDOC yesterday. Unbelievably good momentum for a couple of days in a row. And again, very similar to what we just talked about in INO and Boeing. We look for that consolidation, looking to bigger moves, and look at this 2-day pullback consolidation and explosion. I would personally be looking, if the stock opened higher, if it was a swing trade, to be scaling out, or if not even getting out on a higher opening. And you can see it's actually higher into the market with a negative pre-market. Again, the distinction between swing trading and position trading. If it's a position trade, you're looking to hold longer, nothing wrong with hanging on to it because you're getting the exact movement that you want. But if you're a swing trader looking for that next push, definitely something to consider. Next, we have CRM. Really good, solid momentum move here in CRM, punching through new highs. Again, very similar to what we saw in SE yesterday, where it's still a long, but not a new swing trade long at this point. And what I mean by that is, look what happened to SE yesterday. So really, the stock basically went up $25. So they still like it long if it stays above the open. Did not stay above the open. So we're seeing something similar here in CRM. I still like it long, but it needs to have that very certain criteria. Baba was also called out yesterday. We finally punched through this resistance level. I still like this long. The lower opening is not scaring me out of wanting to be long this stock today. ZS actually was called out. I want to see, this is actually interesting. We kept talking about it needs to stay above this level. It finally did close above 112, which was the level we're looking for. But you can see it failed, and now we're actually closing near the low. So as long as it's above 112 and in a positive state, meaning I need to see higher lows on the daily chart, I'm still going to look to be long this stock as well. OSTK, which I talked about yesterday, I took out of my watch list. Personally, I just can't make money in the stock, but that doesn't mean you can't. Really good, solid push to the upside, still looking to be long the stock as well. And last but not least, we're going to round it out with LVGO. So LVGO, again, very similar to what we just took a look at in ZS. We want to see this remain above 78, which it looks like it's going to stay above 78. If it does stay above 78, still looking long because it just consolidated for about 10 days. So the first push through resistance, as long as that push through remains well bid, which means higher highs and higher lows on the daily chart, we could look for a new swing trade in that direction. So hope you found this video helpful. If you'd like to trade with me in real time for the next 30 days, click down and find out how to do that. I'd love to have you in the community. Especially if you find these videos helpful, please subscribe so you get updates. We give trading lessons as well as trading ideas. This morning's was pretty good. We talked a lot about how to trade with the smart money. You might find that one helpful too. And again, keep an eye on NVAX. We left some pretty strict criteria there to pay attention to that stock today as well, and over the next couple of days. And INO is an interesting one too. So have a great day, everybody. Be safe out in the world right now, and let's make some money together. Take care.